Well, hello everyone. Welcome to Getting Started with Technical Analysis. My name is Barbara Armstrong. I'm delighted that so many of you are helping bring this class to life by joining live here today. And for those of you watching this in the archives, welcome to you as well. Today we are going to talk price patterns, my friend. The last couple of weeks, we have talked about flag patterns. We have talked about pennant patterns and triangle patterns. And so you may be saying, like, haven't we done the pattern thing? Well, not completely, because we haven't talked about head and shoulders patterns. We haven't talked about inverted head and shoulders. We haven't talked about cup and handle patterns. And I brought my cup just to demonstrate. So we're going to talk about these patterns that are consolidation patterns. They can be trend reversal patterns, or at times they can be trend continuation patterns. So we're going to look at a whole pile of charts that have these types of patterns on them. And then we're going to look at what entries a trader might be looking for to consider placing a trade. And we're going to look at perhaps a stock trade and perhaps an option trade on some of these stocks as well. So we have a jam-packed session. I hope everybody has got their beverage or whatever they need. They're ready to hunker down. They've got their cursor ready and their drawing tools ready so that they can follow along. And we're going to play Simon Says. When I started as a client with this education, if the coach drew a line on the charts, I tried to mimic that, just kind of trying to train my eye to see what they saw. And so that's what we're doing today. If you have not already followed me in the land of X, I post on X, I can speak honestly. I post on X a lot of charts with these patterns on them day to day, and I've posted a couple already today. So I invite you to follow me on X. Barb Armstrong CS is my handle. We also have the privilege of having the fabulous Mr. Ben Watson riding shotgun with us today, and he teaches technical analysis in the live event workshops. And so if you haven't gone to one of those, my friends, you're missing out. I'll come back to that in a minute. But just before we get into the thick of things, know that everything that we talk about here is for education and information purposes only, none of it to be construed as a recommendation on the part of Schwab or myself. Know that when we look at options trade, the options carry a high level of risk and aren't suitable for all investors. We use the Paper Money software application on the Thinkorswim desktop platform, and it is a brilliant place to learn, to become familiar with trading strategies, and then how to place trades and manage trades on the platform. There are some nuances and differences. One is that with a short option, it will never be assigned early in Paper Money, and that can happen in a live account. But great tool for learning. Yeah, and it looks like Mighty Mouse was in Seattle. So Seattle, Mighty Mouse, if you want to talk about, I don't know if you're just from Seattle or if you were at the Seattle event last week, but if you were in Seattle last week, please type something into the chat. And if you're here for the very first time and, you'd like to be part of this community, just type a greeting into the chat so that, we can all welcome you. Okay. All righty. So, stop loss orders, when we use those, and we'll be placing a stop loss order on a stock position today, know that those don't guarantee that we're going to get out at any particular time. And oops, I thought I had gotten rid of that. Just a sec. I don't know how this ended up in here. Okay, let's go back. Okay. Sorry, guys. Not trying to give you whiplash here. So I've got one quick announcement. Then we're going to take a look at a couple of these price patterns, and then we're going to spend the most of our time or the rest of the time on the charts. Now, my quick announcement is that this weekend we're in Atlanta, and I get to go with Ben this time, and it's another 2-day technical analysis and introduction to options in Atlanta, and the registration is closed. But if you live in the Atlanta area and you come, I am sure we will find a seat for you. So You didn't hear me say that, but these 2-day events, I would fly from Michigan when I was living there to DC to do an event, or I'd drive to Chicago, or I'd go wherever I needed to go, to advance my learning. And now I've been a coach for 8 years, so you never know what can happen, right? And Ben will be leading the charge this weekend again, and I get to just kind of ride shotgun with him. So looking forward to that. And if you're there, please come out and come up and introduce yourself to us. After the event this weekend, the next one will be in Scottsdale, followed by Chicago, and the Chicago event will be an advanced option, 2 days on advanced options. So if you're ready to get like your brown belt or your black belt in options, or something above the introductory level, come and join us in Chicago. I'll be there as well. And then we've got Detroit coming up in April. Okay, so that's that. Let's come now, just take a couple of minutes and talk about, what are price patterns? And over the last couple of weeks, we have talked about flag patterns. We've talked about a triangle and wedge patterns. And today we're going to talk about some additional patterns. But, each pattern has kind of a unique construction, doesn't it? And so we're going to look at how these patterns are constructed. And, these happen over a lot of different time frames. It's not just, a 3 to 6 month time frame. It could be, a multiple year time frame. If you were interested in trading during the day, it could be, days, minutes to hours, and then hours to weeks, and weeks to months. Yeah. Okay. And so, these can appear in any time frame. Okay. And then we're not only looking for the pattern, we're looking for some signals. So like with our flag pattern, where something comes up and then pulls back, and I'm going to just draw some bullish examples here. When it comes up, what's our signal to entry? Well, here we might be looking for a close above the high of the low day. And we talked about that last week. And when we have something that's been, say, uptrending, and then it starts to consolidate, kind of comes up, we might, and I find it really helps my eye to draw a line. So, we're seeing kind of a wedge pattern set up. And so what are we looking for here? Well, we're looking for it to break out either to the upside or to the downside. And then, we can measure and create targets based on these patterns also. And often there's a number of choices. Yeah. And so, this gives us just an awful lot to think about. And it's so interesting, because I remember when I first started, I'd be talking to a coach, and they would see things that I didn't see. And so, technical analysis, it is a bit of an art. And so the more you come back and practice this, it really is a skill. It really is a skill. So the patterns we're going to look at today, and we're going to spend less time on this one, because this is a bearish pattern, and the market has really not been terribly bearish. I mean, we had an angsty day kind of on Monday, but the overall trend of the market has been uptrending. And so now this is a more bullish pattern, a double bottom where something comes down and it's been downtrending. So it's been on the struggle bus. It comes down, hits a bottom, comes up, and then just can't continue the climb up, and comes down again and hits a similar bottom. And we call that a double bottom pattern. And it usually follows a downtrend where you're now looking at equal lows. And then what are we looking for? We're looking for a break above this resistance line. And sometimes it'll break above and then come back and retest. And so we're looking for this break. And then if it's come back and retested, when it bounces, that could be considered another entry. Okay. And what might our target be? Well, if we have a range here of say 10, we'd take whatever this price was. So if it was 50, we'd add 10 to it and say, okay, our target then is going to be at about plus 10, around 60. Okay. Okay. Any questions on that? Oh, okay. And I'm going to back up for 1 sec here because we started with the double top and somehow it skipped ahead. And so this would be a bearish pattern where something comes up, hits a high, it's been uptrending, okay, hits a high, and then it starts to pull back. And in the beginning, you may think like, ooh, this looks like a bull flag. But if it comes back below this previous high, you're going, not sure this is still a bull flag anymore. And then it comes up and hits a similar high and pulls back. Now we've got this double top. And when you get the second one, you're kind of going, ee. And if it breaks below, then what might a target be? Again, you're going to measure from the top to the bottom. And just to make the math easy pour moi, if this is a range of about $10, you'd say, well, I'm going to move my target to $10 below. And that would be my target. So if this was 50, our target would be 40. And to me, it's kind of fascinating just how often these things come to fruition, but not all patterns do. And I'm going to show you some that have happened back a little further in time that have, it's like come right down to this 40 and then started to bounce. And then sometimes it breaks through and it's not really a true breakout, it's a fake out. So it might come down and then do an about face. So come down for a few days and then turn around and move it back again to the upside. So, if anybody ever tells you that something is a guarantee, don't walk, run in the other direction. If it's in the world of trading, because, sure things, they don't really exist. Except for they say death and taxes, right? Okay. So let's go out to the charts. And I'd like to start with a couple of patterns, and we're going to look at a whole bunch, and then we're going to place some trades. But, when I said the market has been uptrending, if we look at the last year, we're seeing an obvious uptrend here, right? The S&P 500 up over 20%. So is the NASDAQ. We had this period of consolidation or a pennant type pattern forming in December, and then it broke out above that. And it's now, when we come and look, like it broke this resistance line, came up, came down to retest, not just once, but it appears twice. But this was a new all-time high for this index. Okay, so, and this is really to focus on introduction to technical analysis. So we aren't going to spend a lot of time talking about the market in general. Let's go and start looking at some of these price patterns. So, Disney. So with Disney, could we be seeing what we call a cup and handle pattern setting up? And this one would have started forming way back in April of last year. So, and this is kind of one of these things. Now, you can use wicks, and some traders do, and some don't. I tend to cut the wicks off just to be more conservative. So this, this line is at 83.84, but just let me get rid of this drawing tool. And that's really a personal choice. If you're including the wicks, I'd say it's a little more aggressive. But if we snug it up to where it closed on this low day, that was more like almost $85 as opposed to $83.91. Okay, that's where it opened that day. Okay, so this is a huge pattern. And when we look at this and we say, do you see what I see? So we have this huge bowl and then the cup. So here's the cup, here's the handle, here's our resistance line. But has it broken above yet? No. And so what do? Well, what we do is we wait. Yeah, we wait. And sometimes, the best thing to do is take one hand, match it up with the other hand, and then put them underneath your behind and sit on them. And you might say, but you drew that line. There is a diagonal resistance breakout. It's like, But if you're waiting for this pattern and then if this pattern does happen and you say, okay, well, it will have gone from 85 to 118 minus 85, that's a range of $33 potentially. And so then you take and add $33, or you might say, I'm just going to add 30, being conservative, take a little bit off the top. But, you could add that $33 to that pattern. But do we have it yet? No. And so we wait. But that could be on one of your watch lists. And like somebody pointed out, we have earnings coming tomorrow morning. And so this might be a good one to discuss in our trading price patterns tomorrow. Okay. So that is a Disney. How about Boeing? Now, Boeing has been on the struggle bus for so long. If I needed a bearish trade, I would just Boeing was one of the ones that I would look for. But, and Boeing, and if we look at this as a 1-year chart, but we can see that it was downtrending coming into 12 months ago. Like if we pull up a 2-year chart on this, at one point this was up at 267. So this has been struggling for quite some time, right? Right. And then it came down and it continued kind of rolling down the hill, and every once in a while it kind of try to rally. But do you see this pattern? So some might look at this and say, well, I see an inverted head and shoulders. And others might say, well, what are you talking about? So here's the first shoulder. Here's the head. Here's the second shoulder. Okay, and we've got quite the range here. So if you take this kind of like 138 to 180, that's about $42, right? What might a target be? Well, according to this range, if we added $42, it could be about $222. And we've already had earnings on this. But again, what's the question once you see the pattern? Once you see the pattern, what's the next question? Has it broken out? Yeah, and Mike is saying, oh, I saw a cup and handle. And you know what? You're right, because here's the cup, here's the handle. So there's our cup, there's a handle. How do we measure the range? Exactly the same way. Exactly the same way. And so if you said inverted head and shoulders, you are correct. If you said cup and handle, correct. If you said, I see a breakout, well, you're seeing something I don't see yet. And so again, raise the right hand, raise the left hand, sit on them. We aren't quite there. And, sometimes, let's say you're on vacation for a week, it could go up and then come back and retest. And so it's kind of like, here was your first chance. And if it comes back to retest, you might say, there's my second chance to get in closer to the resistance level. Okay. So that's Boeing. Okay. You ready for the next one? Let's look at 5. Now 5, here's another one. Five Below. If you're not familiar with this company, it's kind of related to Dollar Tree, value retailer. Sales per share have been going up nicely year after year. We saw a 13% gain in earnings per share last year, but this stock has struggled. But now we come down because this is a 2-year chart. So let's zone in. What do you guys see here? A sippy cup. Oh, I really like that. I have sippy cups for my hot tub. And we put wine in ours, but you can put whatever you like in it after a day of skiing. So this could be a cup and a handle. We had earnings. It broke out. So we had the breakout, right? And then it came back and it did a retest. So we had the breakout. We had the retest. And then what happened? It came back, retested. And this pattern here is considered a bullish pattern, but did it hold? It didn't. It's now back in this range. And so, this could, had we placed this trade, it is likely whether it was a stock trade or an option trade, we would likely not still be in that trade. And so this would be one of those where, in spite of your best technical analysis, it just didn't work out. And I looked hard to find some of these examples because, I don't want you to think that just every single time this works out beautifully. So the drop on 5, actually, it does negate the pattern. So you look at this and you're going, well, dang. So now, and I really like that question, Jay. So now what might we be looking for? So let me shape the Etch-a-Sketch and we'll close this. So now what might we be looking for? Well, we might say, okay, this pattern is no longer relevant because it didn't come through. What we're now seeing is this downtrend. Okay. And we're looking for, if I duplicate this, we're looking for it to break out of this channel one way or the other, but it's currently downtrending. And so, if this came up and hit this ceiling or resistance level and started to bounce down, there are some option traders that might choose, to take advantage of that. And trade it bearishly because it's back to moving bearishly again. Okay. Okay. Now, could it be setting up another new pattern, like a longer term pattern for this to come back up? And then could we look at it from this perspective? Say, could it be setting up a new kind of cup and handle? Maybe. But from where it is right now, do we have an entry signal? No, we can look at this 6 ways to Sunday, but I don't see one, with my little eye. Okay. So let's look at snow. And there's 15 inches of fresh new stuff up in the mountains near me. So what do you guys see on this one? What do you guys see on this one? On snow? Go ahead and type that in. So I'm seeing, and this pattern, like it started last March, that's like almost a year ago, right? It's been setting up for a long time. So downtrending came up, came down, up again. But did it break out? It looked like it might be. And then today, and when I first looked at this, it was breaking out with a lot more oomph than it is now. But, does this look like a breakout? Could be a breakout, could be a fake out. And this is where then, and this is our cup and our handle pattern. Yeah, somebody said Aladdin's lamp. Yeah, inverted head and shoulders with a big head. So it could be kind of a sloppy head and shoulders. Yeah, with a big head. Yeah, there's the nose. I didn't draw that anatomically that well, but you get what I mean. So if we could we look at this and say, okay, we have earnings coming at the end of the month. It's February 26th. Could we look at this and say, well, I'd feel better if it went above today's high. That would be a little more confirmation for me. So could we put in an order at 190.92? If 190.92 was the high, just let me write this one down. Snow. So could we go to 190.92 and add $1 to it, or add 50 cents? But if we said 191, if it gets to 191.92, I'd like to buy shares of stock. And you know what? I'd like to just hold it. I'd like to put it in my trend trading growth stock group. And if at some point, we wanted to sell it, we could sell a covered call with the intention of getting called out. When we get close to earnings, because they're not till the end of the month, we could sell a protective put to protect our position if we had 100 shares. Now, our max position size in this account is 25,000. Could we just put a plain old stop on it? We could. But with this one, because we've got earnings coming up, next week, we'll look at adding a protective put to that. Now, why don't we want to do that now? Because we have to pay for time. And so often, people will add their protective put as it gets closer to expiration. Now, some, might say, well, I'd rather do it now so I don't forget. And so if we said, well, if our support is here around this 186 level, and, so let's say I was going to put my stop at around 180, 3% below this line. So if I came to the trade tab right now, February, our earnings is the 26th. So, we'd have to pay for the 180 strike, $8.90. So we might rather come in 10 days before, and I know that volatility will go up, but if we're only buying 10 days worth of time, there's less cost associated with that. And so that's why we're going to wait. Okay. Because we still are 20 days out. Now we could put a stop in, but one of the frustrations sometimes, like happened with C yesterday, is that it gapped down based on, world events, so to speak. It gapped down, came down and triggered our stop from another class, and then rallied by the end of the day, and we wouldn't have ended up stopped out at all. And this type of transaction or reaction to an earnings event is not uncommon. So there's nothing that frosts your petunias like getting nicked out over earnings and then having the stock go up to the moon and you're no longer in it. So we're just going to buy 100 shares, and we're going to go back and buy 100 shares of Snow. And then we're, in an upcoming class, we're going to add that protection closer to. And we're going to put this in our trend trading growth stock group. So we're just going to buy 100 shares. That's under our 25,000. And the reason we're not buying like 150 shares or, an odd number is because we want to be able to buy that protective put. So we're going to put a note to add a protective put. And actually, we don't want to buy it yet. We only want to buy it if it goes above. And this is the way that is easiest for me to enter in my mind. We're going to make this good till canceled. We're going to say we want to buy Snow if and only if it goes above 191.92. Save. And then when we come in here, we're going to put this in our trend trading. We have it. Well, we don't have a protective put yet, but we could put that in that group and then say add protective put. And this is based on the cup and handle pattern. That's our entry. Now, this is this is saying if it goes above that price in the extended hours, will it fill? And the answer is no, it will not, because it just says good till canceled, and it's not GTC plus extended. Okay, so this will fill just during the day. Now we could change that. Ranjit is asking how I find these stocks. I keep lists, and so, I mean, this is kind of dorky, but I have a list of bullish stocks. I jot them down as I see them, and bearish stocks and sideways moving stocks. And then today I just linked my watch list to the Dow, and I just started clicking along. And I might have done the same thing with the NASDAQ. Okay, so Snow is not one of the ones that is listed on the NASDAQ, but another one that I did see. So that's our first trade that we're teeing up is Snow. Let's go look at Lulu. So Lulu, and again, this is one, the other thing I did is I went back in my X account and I knew I had posted a bunch of cup and handle patterns because I posted so many inverted head and shoulders and candle patterns because the markets in general were pulling back in December, and then some of the stocks started to rebound. So sometimes everywhere you look, these patterns are just everywhere. And somebody had said, geez, Barb, like now every time I look, I'm seeing these cup and handle or inverted head and shoulders patterns. But, with Lulu, it may not be a cut and dried head and shoulders pattern, but we're seeing this big bowl type pattern. This big consolidation. Maybe it's like a one-shouldered, but, and then did it break out? Yes. Did it retest? Well, it came back like once, twice, like 3 times a lady. And it looks like on Lulu in one of my other classes, we placed an example trade when it came back and bounced here, and then, others might say, well, this pattern started in December. We're now in February. We have this kind of little mini double bottom and it broke out again here. But if we measure this pattern, your 227 to 367, that's basically 140 points. That's a big move to the upside. That's 367 plus 140. That's a target of 507. Right around here. Which, given this chart, doesn't look that insane, does it? So it's now broken out above this little pattern and come back. So we had the breakout and the retest here. And so this is an expensive stock at $415 a share. If you had a smaller account, might you say, well, I don't know about owning shares. You know, and you know, we could buy 50 shares of this and put in a target around this 507. So we could do that. And if we wanted to give it room to move, we could put our stop back below here. Or we could put it, you know, 3% below this 405 line. And so if we wanted to do that, so do you guys see what I'm seeing here? Yeah, we want to look at, you know, somebody's saying, is it more important to look at the last couple of months? Well, it depends on what time frame you're trading. You know, is kind of the answer to that. But if our target here based on this pattern could be, say, around that 507 mark, maybe we make it knock a little bit off it. Like it's currently trading at 415. What if we made it 499? And we bought some shares. So if we can buy $25,000 worth of stock, how many shares would that be at 415? So I take 25,000 divided by 415. We could buy 60 shares. And if we said, well, if we want to give it some room to move, because, you know, we've got 400 of our 500,000 sitting here in cash. So if we want to say like, hey, would it be the end of the world if it came back down to this 367-ish level? No. Now, if it really takes off, do we want to move our stop up? Absolutely. But could we say, I'm going to take this 367 times 0.97. So that would be 356. This is Lulu. And if we're, you know, at 415, we're risking about $60 a share. And if we're buying 60 shares, that's $3,600. So that's more than we want to risk. So maybe we say, well, maybe we knock it down to 50 shares and we'll get a little closer to that 2,500 number. And then the intention is if this continues to go up, we're going to move the stop from being down here to up here. You know, once we have a higher degree of confidence that this support resistance level is in fact going to continue to act as support. Okay. Now, why would I even think about doing this, putting it lower? Well, if we have a stop at 356, which is below here, let's just go to the option chain. Why am I going to the option chain if we're buying the stock? And we're going to do an option trade on this as well, in that we're going to do something called a long call vertical. Now, if you're not familiar with that strategy, we're just buying a call, and then because the calls are so expensive, we're going to sell a call above that to help fund the purchase of the call we're buying. And it means you're limiting how much you can make, but you can still, you know, make a nice return. Okay. In a, you know, say a 20 to 50 day time frame. So if we come to the trade tab and we say, well, just let me come out here. If I'd say put the stop around 395, that's one option, versus 356. And if we come out here to March, and I look at that 390 strike, there's a 30% probability, you know, that it'll go, it could go at or below $400, a 38% probability, a 76% probability that it's going to come down and kiss it. And at the 390 strike, which is below, we're talking about maybe having a stop around 395. You've got better than a 50-50 chance of it coming down and touching it. 62% of it coming down to 390. Where if we look at the 356 strike, now the probability of it coming down and touching our stop is under 30% somewhere. So you cut the probability of getting stopped out in half. Could you still end up stopped out? Absolutely. And is there any guarantee that we'll get out at the price we're asking? None. You know, like we would have a market order. But if we're confident in our technical analysis and we think that nicer days are coming, and the other thing we can do is, you know, come and look at, you know, what the analysts are saying. You know, okay, they're raising the price target to 420, raising the price target to 495, Evercore from 440. And almost as much more than price I'm looking for, is it going up or down? And so analysts seem to have a higher degree of confidence. And so, you know, and that doesn't mean that they're right, but we're going to come and look at this. We're going to buy custom with an OCO bracket. We're going to put in a target of 499. Oops. And then we're going to manage these as we go. And then we're going to put in an exit of 356 on this one, with the intention of moving it up if the stock continues to move up. And we're going to do 50 shares. And then I'm going to turn this firecracker into a paper clip. If I hit enter anywhere on the screen, these will now all line up. We're going to make this good till canceled. 415.63. And we're going to put this in our stocks with targets. Okay. And fire in the hole. Okay, so we'll wait for that one to fill. That was Lulu. Okay, now there are some that we're going to want to watch. And we aren't going to have time to place another trade today, but if we look at Google, do you see this, you know, inverted head and shoulders pattern? And then it kind of consolidated here, and might it be breaking out today? Now this one comes with earnings after the close today. So, you know, perhaps that's one we'd talk about. Yep. CTVA, Corteva. Do you see a big double bottom here with a breakout and a retest? And then we've got earnings coming on that one also. How about, and this is going to have to be the last one. So if you want to see more, you'll have to join me tomorrow for trading price patterns. So CrowdStrike, it had, you know, the blue screen of death day and tank, but it's been on its way back ever since. And then it hit this range in November, and for a couple of months kind of went sideways, broke out with gusto, kind of came back to retest. So, and some might say, oh, is that like a little bit of a double bottom? It could be, but it's a consolidation pattern regardless. So what have we done today? We've set up two trades, one on Lulu and one on Snow. And then, well, tomorrow we'll add that long call vertical position in the trading price pattern class. So if you want to join us for that, would be great to have you on board. I appreciate you guys being here. You know, we're continuing to link arms and learn together. As we wrap up, if you haven't ever gone to a live event, I'd highly recommend it. So look at what's available throughout the rest of the year. Go to schwab.com/coaching and go to live events. If you could do me a favor and hit the like button, what this does is it moves things up in the algorithms on YouTube so that more people can discover this content. It also lets Ben and I know that you found this helpful. So hit the like button. If you haven't subscribed to the channel, you're going to want to do that. It's in the bottom right corner. So just hit subscribe and you'll be all set. It's another free resource. And then don't forget to follow us in the land of X, Ben Watson CS, and Barb Armstrong CS. So that's a wrap for today, folks. Next week, we'll be talking about another topic in the world of technical analysis. I will look forward to seeing you then. Stay tuned for what's next. I don't recall who is up next, but it's swing trading. Oh, that'll be a great class. So you'll want to stick around for swing trading, which is up next. And we'll see you in Trading Price Patterns tomorrow. Take care, everyone. Bye for now.